Howdy traders, Mark here with from Flipside Trading, and today we want to look at our latest income trade. That was the January 3rd SPX, 3190, 3195 put vertical, which we sold for 25 cents. And we want to examine this from two key points. Number one, what do we look at in order to place the short strike at 31.95, and number two, why do we hold on to the trade on Friday after the big news on the Iran strike really created the market in the overnight session. So without further ado, let's start our overall analysis. So the first thing that we always do is we have to determine the trend, right, from the daily standpoint. So here we are in the daily chart. You see our 200, right, our 50, our 21, and our 8. They're all stacked positive, right? You see that everything is moving up and to the right. The other key thing that we want to take a look at while we're here is look how closely that the SPX is tracking the ADMA, which is this yellow line here. So you can see that this is really serving as a key line of support. And if we really determine what that is, let's take a real quick look from a style standpoint. And we'll put a floating box up here. And you can see that on Thursday, when we placed this trade, we were at 32.28. Let's call it just 32.29. So right away, we knew that if we're going to place a short strike, since we have a positive uptrend, that we definitely want to be below 32.29. So that's kind of like step one. So next thing we want to do is look at this from a more detailed standpoint. So we're going to drop down to our hourly chart, and let's get rid of this box here. Yes, that's just going to be a little bit distracting later on. So let's drop down to the hourly chart, and there's a couple things that we're going to want to take a look at. We'll go ahead and we'll back things up, so we'll make sure that we're looking at it from the same perspective as we were when we're setting the trade. We don't know what happened on Friday. So let's go ahead and move this back, and this is basically the top, the end of the day on Thursday, and we'll just let the rest of the data here settle in. So there's a couple of key things. Hold on a second, we're not all the way where we need to be. Here we go. We dropped out. Here's the end of Thursday right here. So the key thing is number one, we know that we have a key level of support right here, basically at the top of the gap. So we can draw that in, and that'll give us a nice level to start with. Okay, and that's 32.16, and then we'll also look here at the bottom of the gap. That's another great key level. We'll add that drawing, and that's going to be around the 32.0506 level. So we know that if we can, we'd like to get below 32.06, and then obviously we have 3200, which is a nice whole number. There's a certain magnet attraction to those whole numbers, so that really puts us at that 31.95. So that's how we really want to take the initial look at 31.95 and set that up. So we set that up. We got our quarter. We sold our 10 contracts, so we have a possible max profit of $250, and not bad for basically 11-hour opera trade just being overnight. So one of the key things that we want to also take a look at, given that we have an uptrend, and I had this on earlier, but I'll set it up for you here, is that we basically have a pretty good channel. So if we look at the SPX here, and if I add this drawing and I put the channel in kind of right here, you can see that we touch it 2, 3, 4 times, about like that, and we'll duplicate that to get this channel here. We'll bring it all the way down, and so it kind of tells us too, as far as intersection, and we look at Friday, that this intersection of the channel and this gap bottom of 32.05 is a very key level for us. So again, it kind of reinforces the 31.95. So the key thing is that we have overnight, and the SPX doesn't trade overnight. So now what we want to do is look at the futures, the ES minis, because they serve as a proxy for the S&P 500, and let's use this as a determination of how and why kind of we wanted to stay in that trade, given what happened on the open. So let's go ahead and just change this here on the hourly chart, and we'll go to the S&P 500, and we'll let that pull up here real quick. And as Thinkorswim is thinking about things tonight, thanks for your patience. If you pull up any second now, we must have a little data action going on. All right, here we come. And boom, we're in. So the key thing is let's take a look at what happened on the overnight session. So here we are. This was the end of right Thursday at 2 o'clock. So here comes the news, and overnight we drop all the way down to this level here. So let's just kind of mark this level and see what that tells us. So we mark it here. I want just kind of extend it all the way across, and what we see is we kind of always look left to be right. So we want to look at left. Is that overnight we really hit this top of value. Remember, the value area is where 70% of all the volume of all the trades have taken place. So we see that we basically went underneath it, and then it got rejected, and we started moving back up. And as we move back up, this becomes the actual value area that we use for the day. Is that by here? This is 5 a.m. The market doesn't open until 7:30. This is Mountain Time, and so we get here to 6, and we get here to 7 o'clock. We are back in value. Okay, so now we know that this value area kind of serves as support. It's also telling us that we got rejected here at the 3207 level. Remember, our strike's at 3195. We never even got to the 3200. So this is telling us quite a bit that we have good support here. The market went down, it made a test, and it pushed things back up. And if we kind of look one more time back to the XPX chart, you'll see that it actually, that channel that we drew before, that channel even on the open, after the market kind of digested that news and came back, it really held, pretty well. Here we are on Friday morning. It started up underneath, and then we basically held it just about the whole day. So those were that served as the general premise of why we should stay in. And that premise is also built upon another thing besides technicals, and that's kind of the geopolitical reality, right? Politics aside, Iran is kind of a mid-level nation from a conventional arms standpoint. And that their ability to take on the U.S. in an actual ground shooting war, that's not going to happen, right? I mean, if we've seen what's happening first, we've always been the provocateur by invading Iraq 2 different times and starting a ground war. And it really just makes sense that given they know our military might and our military power, that they're going to continue kind of their retaliation through their 2 different proxies. All the different Hezbollah factions, as well as kind of the Houthi rebels down in Yemen. So, if you pull all that together and you see that the market kind of comes to the same realization on the technical standpoint, you get a pretty good feeling. And is it difficult? Definitely. It's a little bit of a white knuckle, right? You never know when the market is going to go ahead and drop, or the next news flash is going to go ahead and trick it. But we definitely had like I said, these multiple levels, of support, and we had our triggers, our 3216 and our 3206 to really tell us when to manage and exit the trade, during the actual trading day, which started here at 7:30. Even on the open, we never crossed those thresholds. So. And that's how we do it, right? That's how we set the trade up. That's how we then look at the ES minis futures to look at the S&P 500 as a proxy in order to help us make a determination, as well as our rules that we knew beforehand of where our key support levels were, on whether or not we needed to manage the trade. All right, guys. Hope you had a great weekend. Good luck trading this week, and look forward to talking to you soon.